The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady. And let's see, this is the 7th, 8th, 9th, 10th, 11th, 12th, 13th, 14th, 15th, 16th, 17th. 17 is the number. We have like 9 days, including today, 10 days left till the end. And those of you that have been waiting, or those of you that have filed and we want to talk taxes, we are here to help you. 803-0930, 803-0930, star 930 on a cell phone. And we're from EG Tax. We have all of our offices are open tonight until 7. And this is Tiffany Fabian. Hey, Tiff.
Hey there, Esther. How goes it?
Good. So we want to talk taxes. If you have any questions, 803-0930, 803-0930, star 930. And I got a whole list of little things that mean a lot on your tax return to reduce your liability. By the way, if you're somebody that owes money, we can talk about that, what to do with your liability, things that you can do, last-minute things you can do to reduce your liability. And our website is EGTax at egtax.com. You can go to egtax.com, ask a tax questions. We're happy to help you with that too. Right?
Yep. Yeah, a lot of people are getting those letters from New York State that say we need to verify your withholdings. And so just know that that's pretty customary the last few years. And they're just want you to send anything with W-2s or 1099s that had New York State withholdings. They want you to. It sounds so
nice that it's customary. It's unbelievable that the state of New York is going to hold up your refund because they want to verify your withholding. This is electronic filing, and it's bizarre.
And then once you send them the proof of the withholdings, it takes several months.
Then they get to keep it for another 3 months. It's just bizarre, and it's wrong.
So there's another reason you might want to adjust your withholdings.
Anyway.
Yeah.
Anyways, let's see. Little things mean a lot. If you're somebody if you're under the age of 65 and you have wages, look to make sure that you don't qualify for the earned income credit, especially if your wages are lower and you maybe you have low pension, low Social Security. You might get an earned income credit. So many people that sit around and say, I just worked at Walmart, I made $4,000, I don't have to file. You don't have to, except there's money sitting on the table because you get an earned income credit.
Or a lot of people think, well, I don't have any children, so I won't get an earned income credit. But earned income credit is also for people who don't have children, too.
Right. If you're retired under a disability and you're under the age of 65, look to make sure that you don't qualify for an earned income credit, because disability income when you're under the normal retirement age is changed to wages, and so you may get an earned income credit for that. And if you're hearing me and it didn't happen, you can amend your tax return and get the money back. I just had a client that came in today, came in 15, 16, and 17. And he says, I know I'm going to owe money. And I said, are you getting letters from them? And he said, no. And I said, that's because you got a refund coming for those years. That's why they're not writing you. So if you haven't filed those years and they're not writing you, it's because you are getting a refund.
So go get it.
So anyway, when he left my office, he got $3,500.
Oh, yeah.
And his girlfriend said, you owe me. I told you she'd get you money. And it was just, he had short forms, One year he had an earned income credit. Okay, I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. And we got Michael from Tonawanda. Hey, Mike, how can we help you, sir?
Hi, Esther. I'm 65 years old, and I haven't filed my 2016 returns because a lot of paperwork was missing. And I know I'm getting money back. But anyways, as I was going through my paperwork, I saw that I had an IRA, which was worth $6,500 because I had worked for $6,500. And when I looked at it, it's listed as a Roth. Now, is there anything that I can do to fix that? Because I was hoping.
No, I mean, first of all, you're 1 year late. All right. Now, if this was a 2017 return, you could still reclassify your Roth to a traditional through this year. Starting next year, you cannot do any reclassifications. Okay. But because you're a year late, there's nothing that you can do.
Okay.
It had to be done before April the 18th last year on a 2016 return. Now it's more than a year old, so there's nothing you can do.
I was doing a tax return yesterday for somebody who put money into a Roth, and they still qualified for the retirement savers credit.
That's
but
right.
you have
so
to
you
be
might,
sort of
you
a
look
low-income person.
Right.
Lower.
How much money did you make last year? What's your wages, Mike, last year?
Well, on that was $6,500 plus my retirement was $50.
15?
Yes.
And are you married?
Yes.
Okay, well, it's entirely, you would qualify for retirement savers contribution credit. So take a look. If you have a liability, and it sounds like you would, a small liability, do the pension savers credit.
And he hasn't filed yet for
Right.
16.
Right, so you'd get that.
Okay. Okay, thank you.
All right, thanks, Mike. I'm Esther Gullius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. We're giving you little things that mean a lot. If you have wages and you're under 70 and a half, look at putting money into a traditional IRA.
There we go.
This morning,
Mike.
I was with a client. You know, he's a pastor. He and his wife are, they have a church. Their salary was lower. But they're great savers. And I said, why don't you? And he's got a qualified plan. And I said, well, have we thought about putting $6,500 in your wife's spousal IRA? And they said, I don't know. We don't have that money. But then they said, we have savings bonds we want to cash in. And isn't that going to hurt us next year? And I said, well, here's the plan. Cash in the bonds before the 18th.
Right.
Put the $6,500 in an IRA for her this year. They saved $2,000 in taxes then, right? And they got the pension savers credit. And I said, and the balance, put in an IRA for next year, and it'll be free.
And they're like, wow.
Right, and
smart.
They didn't know, they hadn't planned on it, but, you know, it's a lot like shooting pool. You have to do the banks and hit the thing at the bank, and it goes, you know. Anyway, let's go to Jim in Clarence. Hi, Jim.
Yeah, hi, Esther. I have two questions.
Yeah.
The first one is I'm preparing my taxes for my daughter, and is her state of residency. She graduated from West Point in New York at the end of May. At that point in time, she was in the regular Army, and she was stationed in North Carolina. She didn't move to North Carolina, however, until maybe October. She spent a month in New York and then 3 months in Virginia. And so the question is, what state should I?
All right. So if when she left New York, she was considered to be a New York State resident, so she would be a part year New York, and then when she relocated to North Carolina, you said, right?
Yes.
She then became a part year North Carolina resident. And what the heck was she doing in Virginia? Just working there?
How old is she, James?
Training for the Army. But
all right. So did they withhold any Virginia taxes on her W-2? Because she might be a non-resident Virginia. So you'd be part year New York, part year North Carolina, and a non-resident Virginia if there was any wages that were attributable to Virginia.
Okay.
Okay?
The second question is, my son did put money into a Roth IRA for 2016. Is it too late to convert that to a regular IRA?
You can do a reconversion up till April the 15th, April 17th on from a Roth to a traditional.
Okay, so it's called
this year. This year only. Starting 18, any fresh money into Roths or traditional cannot be converted, but through 17, you can still do the conversion.
And Mike, James, you have to excuse me. I'm sort of ignorant. Isn't West Point sort of like a college? Or I mean, I know it's a military, but how old is your daughter?
She's 22. So it's essentially a college. She, graduated with a Bachelor of Science degree and a commission in the Army. But as a West Point cadet student, she was in the regular Army.
Right, and everything was paid for her, correct?
Everything was paid.
Yeah, that's what I thought. So you didn't maintain her support at all?
No.
Yeah. Okay. So part year New York, part year North Carolina, possible non-resident Virginia. So looks like you're going to be doing 3 lovely tax returns for your daughter.
What fun. Oh,
Thanks for calling.
bye-bye.
Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930. 8030930, star 930 on your cell phone. We're going to take a short break and be back with Van and Carl and Steve and your questions on the other side.
You're my plastic princess.
Hey, I'm Esther Gullius, the tax lady from EG Tax, 8030930. 8030930. My
Star 930 on a cell phone.
My mic was going out, so I couldn't hear myself. And let's see, we're going to go back to the phone, and we're going to talk to Carl. Hey, Carl, how can we help you, sir?
All right, Esther, I got 2 questions for you.
Yeah.
Okay, number 1, I'm getting married next year.
Hey, can we come to the wedding?
Sure you can.
Okay, you're getting married, and?
All right, she's on disability.
All right.
So last year I made $60,000. With her income, it'll be $69,000, $70,000. Is that going to hurt my taxes, or she never claimed taxes?
All right. Well, first of all, she's on Social Security disability, right?
Right.
All right. So, in this situation, 80% of her Social Security is going to be taxable. So it's not going to be the whole $9,000. It'll be more like $7,000. Is it going to hurt? You're going to get the extra income, and yes, you're going to end up paying more taxes because of her Social Security disability. So maybe what you'd like to do is
a
have
spousal
her volunteer.
IRA, like you said.
Well, that's true. How old are you, Carl?
I'm 61.
All right, yeah, put money in a spousal IRA for her. So she's got the maybe $7,000 going to be taxable income from the Social Security. If she puts that in a spousal IRA, that'll become a deduction and it'll negate everything and save you the money.
Okay.
Okay?
Second question.
Yeah.
I'm having solar panels put on my roof. Supposedly, my federal tax, they'll pay 50%. And I'm wondering if that's correct.
No, that's not correct. You'd qualify for the energy credit, but it's a percentage on the federal and a percentage on the state. You work right now, right, Carl?
Yes.
Yeah. So it between the 2 credits, it looks like it's 50%, but it really isn't 50% because it's a federal credit, and then you get a percentage of the federal is still left from the federal on the state. So you will save money though.
And then some carries forward, whatever is not used.
Right. All right, because my tax withheld was $10,000.
Okay, well, obviously you're going to be able to adjust your withholding based upon the projected credit. What you might want to do is email us through my website at egtax.com and give me the figures, and I'll tell you exactly how much your credit's supposed to be next year for each of them. Then you can adjust your withholding down.
And then I had somebody who did solar panels and they delayed installing them. You can't get the credit till they install them. So she had them at her house, but they didn't install them. So make sure they install them too.
Okay?
All righty.
All right. Thanks, Carl.
Bye.
All right. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax. We're going to go to Stephen Chafee. Hey, Steve.
How you doing there? I got a question for you.
Yeah.
Regarding dividends.
Yeah.
I have some dividends, both qualified and ordinary dividends.
Yep.
Okay. When you put them on your 1040, there's a line that says 9 ordinary dividends. Do you have to list all your dividends there all at the same time, or do you only list one of them?
All right. So let's say that you have dividends from 5 companies, and they total 1,000.
Right.
So the $1,000 is going to go under total dividends. Then the qualified dividends are on the next line. those qualified dividends are carried to the computation worksheet on Schedule D to reduce the taxability. So you pay less taxes on the qualified dividends, and that's done on the Schedule D.
So it balances out when you get to the Schedule D.
Well,
It's subtracted.
that's exactly right.
Very good.
Okay?
Thanks for your help.
You're very welcome. Bye-bye. Let's see. We're going to go to, who's next? Tom. Hey, Tom, this is Esther Gullius. How can we help you, sir?
Yes, I mean, I'm on Social Security Disability, $1,337 this year, or last year. I didn't have an income. Do I have to do anything?
No.
Okay.
You're good to go.
All right, thank you very much.
Thank you,
And
sir.
if your Social Security is less than $18,000 a year, you might qualify for a property credit on
Right,
New York.
if you have a property that is worth, that has a value of less than $85,000, there's a refundable New York State property tax credit that
Or
you
if
might
you
want to
rent.
get. Right, or if you rent. Again, it would have to be under a certain figure, right?
Right, 450.
All right, so I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on her cell phone, and we got Mary. Hey, Mary.
Hi. I have a question. My son works as a private contractor, and he owes money and taxes. And is this a case where putting some of his tax money into an IRA account would be helpful?
Okay, so, the thing is with taxes, it's complicated. So probably he owes money for two reasons. First of all, there was no withholding because he's an independent contractor. And secondly, he owes FICA. He cannot do anything to reduce the FICA except for qualified expenses that he incurred for his business. But the question is, does he have an office and home, for instance? Did he take his mileage? Did he take all of his expenses for producing the income? Because the more expenses he reduces from the gross income that he earned, the less the taxes are going to be, both federal and state and FICA. So that's number one. Number two, if the reason he owes money is because he also owes income taxes, an IRA will help him to reduce his overall tax liability, both federal and state. And like we talked about the pension savers credit, he might qualify for that as well. The other thing is, because he's self-employed, he can do something that's called an SEP. And if he doesn't have the money to put into his SEP now, he can file an extension, pay his liability on April the 17th, and extend the deadline to make the contribution into his SEP until October the 15th, thereby giving him the deduction up front, but allowing him to make the contribution up till October the 15th. That was a mouthful. I was going on like a preacher here. So I don't know if that helps, Mary, but I think that he should have somebody look at it because there are many things that are in his toolkit that he can save some money on.
Okay.
Yeah,
Okay,
call
sweetie?
us at the office, 632-7886. I would love to help him.
All right?
Okay, thank you.
Thanks, Mary. That's what is remarkable about being self-employed is that you want to make sure that the expenses that you had to make the money are attributable and put on that Schedule C if you're self-employed.
Right.
Because it not only reduces the income taxes, but it reduces the FICA. And if you have, like many realtors might, especially now with the real estate market being so hot, they might have $100,000 bottom line. They can put $40-some thousand into an SEP,
Yep.
or
And then
solo 401k
don't
plan, and they have till October the 15th to do that if they do the extension.
And then don't forget next year that contractor or that real estate agent will be privy to that 20% adjustment for
on next year's
return.
Right,
So they
right,
have to
right.
plan for that,
Let's
which
see,
is a good thing.
Who can I talk to quickly here? I got Marty. Hey, Marty.
Yeah, hi, Esther.
Hi.
I have a question for you. I've heard a couple of people say that they want to take their Roths and turn them into a traditional IRA.
Reclassify.
Uh-huh.
Right. What's the benefit there? Because the Roth is already...
Okay, so here's the thing. It all depends on, all right, let's just say that last year I took my traditional IRA, which was worth $100,000, and I rolled it over into a Roth. Then I go to do my tax return and I say, oh my gosh, I owe $30,000 in taxes. I shouldn't have done that.
Mm-hmm.
So you have till April the 17th to reclassify it back as a traditional to save $30,000.
Or another one of my clients, they wanted to use it for an adjustment to income, and so if they reclassified it, they could do that too.
Oh, that's what I was wondering, because after 59 and a half, I believe you don't have to pay any taxes as you withdraw. Right?
No, that's true. But, many people are putting money into Roths, Marty, and they shouldn't, because right now, if you're over the age of 65, starting next year, you're not going to pay any taxes until your income exceeds $27,500. So that would mean that if you were somebody that did Roths all your life and you were withdrawing from a Roth, it wasn't going to be taxable anyway. So you lost the deduction up front, and you're losing and you aren't going to be taxed on the back end. Whereas if you put it in a traditional IRA, the traditional IRA was deductible when you put it in. When you take it out, if you take it out smartly, it's going to be tax-free anyway. So it's a win-win, whereas a Roth sounds good, but in practicality, many times, it doesn't save you anything at all.
Now, do you know, I don't know if this is in your wheelhouse, but are there still balloon mortgages out there? The reason I'm asking is we're contemplating moving to Florida maybe in about 10, 15 years, but I want to keep my house now, so I'd rather just pay the interest on a home I buy down there, which would be doable, and maintain my home here.
I have to tell you, I really don't know. You got to check with the mortgage broker, but I will tell you there's many loans that are very, very low interest rate if you did an ARM. But then again, they can be dangerous because at the back end they're going to hike the interest rate, and interest rates are looking like they're going to go up. And I got a break for news, Marty. All right, have a great day. Bye-bye. I'm Esther Golias, the tax lady from AG Tax. Going to take a short break. 8030930, 8030930, star 930 on a cell phone. I'll see you in a minute. That's like my favorite song, Frank. I didn't know how you would know that I play that in my car all the time. Okay, I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930. We are helping you to get ready for what's happening here in like 9.5 days. So, and if it's already happened to you, you've done your return, you still have time to straighten out stuff. And don't forget, 2014 is going to be closing in a couple days. So if you haven't done your 2014 return, you can still get the money back. Okay, let's go. Yes, Tiff.
I did an amendment last night for a 14, and I think they're picking it up today, I hope.
Hey, Bob. Esther Golias, how can we help you, sir?
I have two questions. As always, I would like to ask you two questions about taxes. One, both me and my wife are 54, and my son is still in college. So we took $9,300 out of our IRA to pay down. It was a Roth IRA. We only had a Roth label on it for a year and a half, well, maybe a year. Before that, we had owned it since 2005. As I understand it, when I took it out in the middle of last year, it was qualified to pay down $9,300 worth of our student loans, our payments to college, our higher education. Because I only had it a year and a half, are they going to give me a grief for that?
All right, so here's the thing. When you rolled it over from a traditional to a Roth, okay, you paid the taxes on it. But the increase between what it was worth when you rolled it over and what it's worth when you took out, that increase is going to be subject to penalty because you were too young to take it out. Now, the penalty is waived if you used it for higher education, which you did. So that's the thought process, but you have to do a 5329 to avoid the penalty.
That's what I heard. I heard it was 5329. So they gave it to me and didn't write in that it was qualified. They told me it was a early dispersion, and they wouldn't change it. The company I took it from.
Okay, but it's still going to all come out in the wash that way. It's going to you didn't tax yourself on the whole 9,300 though, did you?
I initially did. Now I did not. Now I'm.
Okay, so the appreciation is taxable.
Yes, we didn't.
The penalty is not taxable. So you do the 5329 for the penalty, and you find out what the appreciation is between what you rolled it over a gain. So let's say when you rolled it over, it was just for simple math, $9,000. You took out 93. The 300 is taxable. The 300 is not subject to penalty when you do the 5329.
Okay, even though I didn't close either account.
Okay, I'm just doing simple math, okay?
Yeah.
You have to figure out the percentage that you took out of the appreciation. The appreciation portion is going to be taxable, but it's not going to be subject to penalty because you're doing the 5329.
Can I ask one more question?
Sure. If you're a good person, yes.
Well, we're going to pay about $2,500, about $2,300, $3,000 in taxes.
Okay.
Less than, anyways.
Did you do the AOTC, the college credit?
For the child.
For the kid in college. Did you do the college credit?
Unless he's in graduate school.
He didn't graduate. Well, he's his fifth year. He's not really a graduate.
All right, so did you do lifetime learning?
We didn't qualify for that either.
Why?
Too much money.
Of our income, yeah.
All right, did you do tuition and fees?
Page 1 at the bottom of the 1040.
Did you do the adjustment tuition and fees? That's for a higher threshold.
I believe we did, yes. I have to check.
Okay. I would look.
And then don't forget to do the New York State college credit, too.
Right.
We did that, yeah.
So how much is your income, you and your spouse, collectively?
48.
Well, then you would qualify for
lifetime learning. Why didn't you qualify?
I don't know.
I don't think, you know, I know people love to do their own taxes, but they do it at their own peril. So why don't you bring it to somebody to look at? You can go to anybody, but you need somebody to look.
When bells went off when you said you owed $3,000.
If your son's tuition was $10,000, you are leaving $2,000 on the table because you qualify for lifetime learning credit.
Okay, let me try that.
All right, good enough. Thank you. Bye-bye.
But that's
I
good.
had a lady that
he's figuring it out.
I know, and that's what you need to do. But you know what happens? People don't figure it out, and then they overpay.
Right.
I had a lady that called me the other day, and she said, I don't really like this thing for the qualified whatever's on the dividends and the capital gains. It's going to make me do that sheet. And I said, well, you don't have to do the sheet. You can overpay. And she said, well, maybe I will. And I said, that makes no sense to me.
No, you pay enough. That's how I look at it.
Anyway, let's go back to the phone. So we got Rick. Hey, Rick. How are you, sir? What can we do for you?
Yes. Okay. I'm a client of your firm. You guys do a great job. My wife and I are selling investment homes this year. Am I correct in understanding long-term capital gain, with all of our deductions, we probably have a $5,000 AGI, which I think places us either 0 or 10% level for capital gain. Am I with about $140,000 net profit from the sale of 4 homes? Would we be subject to long-term capital gain?
Yeah. You are. You're going to get a deal on the federal, but you'll get no deal on New York State. So if you're in the 15% bracket or lower, you're going to pay 0% on that gain. Are those gains absolutely in stone? Do you already have? I mean, you already got them sold?
No, but that's what we anticipate.
Okay, so what I'd suggest you do, Rick, is you want to give us a call. In about 9 days, we'll be able to sit down and talk to you intelligently about how to structure these to make sure you get them free on the federal. And then on New York State, we'll show you how much it's going to cost you in taxes. It's probably going to cost you 7% on the $140,000.
Okay, I'll give Chris.
All right, there's no charge for the consultation, but this way we can structure it so that you'll make sure you don't pay taxes.
Yep, Chris will be available after April 17th, very easily to talk to.
Okay, Rick?
Terrific, thanks so much.
Thanks a lot. Yeah, I mean, right now we're helping everybody to make the donuts. Right? We're making the donuts.
That's right.
So let's see, we're going to go. And again, 8030930, 8030930, star 930 on his cell phone. And we got Bob in Clarence. Hey, Bob.
Hello.
Hi.
For years, I've had really no taxable income. Nevertheless, fearing the IRS, I send out. There's always 000, and it asks me to do it and so forth. Is there a way to obviate sending it out, even though you have no?
You don't have to do your tax there's a minimum filing requirement, and if you have no withholding and you have no refundable credits, and you're under the minimum filing requirement, which is basically your standard deduction plus your personal exemption, if that's below that figure, you don't have to do anything.
So they don't come after you to...
They do not. They don't say, oh, cripe, Bob didn't send in those 0 returns this year. No, they don't care.
Decades, and it's, it costs me money every year. And
no, you don't have to do anything. You're good.
So I don't need a special letter to send them? And
Nope. Okay. You're good.
They know.
All right, Bob?
They know.
All right, thank you. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. And we'll go to Marianne. Hi, Marianne.
Hello, Esther. How are you?
I'm good. What's happening?
I met you at that last seminar at the hotel, and I want
to.
I love your personality, and you're much more beautiful in person than you.
Ah, you are so nice. Thank you.
Oh, you're welcome. I have to file back taxes, and I know you deal with a firm that you send to get on a payment arrangement. My question to you is, do I go directly to them to do them all, or do I come to you first to do the...
Actually, we do the back taxes, and we set up the payment plan.
So what you're
we
saying,
don't use
let's
a firm.
help people here. It's not that we're doing back taxes. You have an outstanding liability that you need to do. You're looking to do an offer and compromise, right?
Right.
And so we do offers and compromise
we have a
as
lawyer
an arm
on
of
staff.
EG Tax, and we have a lawyer on staff, and he will be very happy to help you. So basically what you're going to do is you're going to present to the Internal Revenue Service all the outstanding liabilities and your inability to pay, and we come up with a settlement that's equitable based upon what you're able to come up with. You make that offer to them, and if they do accept it, then you pay that amount of money, which many times is pennies on a dollar, and then you're out from under.
Oh, okay. So, should I? Is it a special location I need?
No, our corporate headquarters is where the specialist works. So give us like 9 more days, or you can call right now and make the appointment for right after tax season, and he'll be back at corporate, and
we'll do your back taxes. It won't be Paul, somebody else at the corporate office.
Right.
We'll do your back taxes.
Well, you already did the taxes. You owe the money, right, Marianne?
Well, I had some unexpected circumstances, like losing my son and different things. I went to H&R Block, and the man there from years ago, which why I got mad, I was supposed to get a sizable refund back. And what he did was, oh, you come back tomorrow and do this. And I'm like, but it's the last day. They're going to take my money on me. You know what he told me? He said, no, they won't, because we started it today. You'll be fine. Sent the IRS a letter explaining what had happened, and they said, no, we received this 7 days late. You're liable to pay it. It was over $2,000 I was going to get back from federal. So I got mad, and I did something stupid, which I let 3 more years go by. Well, I have to take care of this.
All right, so you don't really know if you owe, though, right, Marianne?
Well, I did return back to work. And I'm on SSDs.
Okay, but
paying into it again.
Have they been writing you letters?
I did receive a couple stating the amounts, but I've been trying to locate because...
You know what, Marianne? What you need to do is make an appointment now, and let's get those returns timely filed. It may be like that client I did this morning with the $3,000 refund that you aren't even aware of. So before we start thinking offer and compromise, let's find out what the true liability is. So we have an office right there in Lockport, right by the Big Lots. So you can go in there, they'll take care of all your stuff, and then based upon that, we'll do the offer.
And it sounds like you don't have some of your forms. We can fill out a 4506T to get your forms for you, too.
Right.
Okay. So do I have to wait the 9 days?
No. Just get it done right now. That office is open, and they'll take good care of you this way. We know what we're dealing with, whether we have to do the offer and compromise or not.
Oh, okay.
Okay.
And I'll set up an appointment and go in.
All right. Thanks, Marianne.
Very much.
All right. Bye-bye. There are a lot of people this time of year who have been waiting and knowing that they have to do it, and they're afraid of the answer, so they don't do anything. And I'm going to tell you, if they aren't writing you, it means that probably you have a refund coming. So if you're not filing because you're afraid, let us help you, because you probably don't have a balance to it all. I bet you have a refund coming.
Yeah, and let's figure it out.
Anyway, I'm Esther Galias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone, and Mr. Tom from Akron. Hi, Tom. How can we help you, sir?
Thanks for taking my call, Esther.
Yeah, what's happening?
All right, so my tax situation is changing a bit, and I just had a question. My wife and I have an S-Corp.
Yep.
And I've had a traditional job for years. I just recently left my job because the company has been growing, which is great. My question is, we've been taking distributions from the corporation just as, I guess, profit distribution.
Right. Mm-hmm.
Using my salary as my wage. So I'm told that I need to begin taking some wages, at least some percentage of the distributions as wages, and then some percentage as profits.
Mm-hmm.
How do I practically set what percentages are appropriate?
Okay, so from any S corporation or corporation, the shareholder, the owner, a shareholder, has to take a reasonable salary. So a reasonable salary would be what you would pay somebody in that position to do what you're doing. Then the excess would be given out as your profit. So all along, that's been the case, Tom. You should have always taken a reasonable salary. So what you'd have to ask yourself is, what somebody in that position filling those functions, what you would have paid them. And that would be your reasonable salary. You put yourself on payroll, and then the net profit would come to you on your K-1.
Okay. And then am I making quarterly estimated tax?
No, because it's on a W-2, so you're going to get payroll. So you're going to do your 940s, 941s, all of your you have nobody else on payroll but you?
Correct.
Okay, so you actually have to set up a payroll. So if you need help with that, you can give us a call. We have a payroll division. You can look online. There's payroll packages that you can do, but you need to set yourself up on payroll, start paying yourself you're withholding your FICA, so the corporation's going to match half of the FICA, and you're going to have withholding on your half. You're going to pay in taxes, just like if you were working at General Motors or Ford or wherever, withholding and state withholding, and you're going to get a W-2 and go on from there.
Okay.
Okay?
I'll look into that. Appreciate it.
All right. Thanks, Tom. And that's the situation. Whenever somebody has an S-Corp, a lot of times they feel like, oh, good, I'm just going to take all these profits out and I won't have to pay FICA. That's not correct.
Right.
That's not correct at all.
You have to do a fair and equitable salary.
Right. And we're going to go back to the phones. We'll talk to Brian. Hi, Brian.
Hi. Thanks for taking the call.
Yeah.
Question about a 1099 dividend form that I get from Vanguard. There's 4 funds that I get, and it seems odd to me that Vanguard doesn't total up all the capital gains distributions. It's on 4 separate lines, and
right.
Am I handling this correctly in that I just add them all up to put in box 2A?
Right. So when you're looking at these 1099s, you have to look at them individually across each line. So you have your regular dividends, qualified dividends, capital gains distributions. There might be tax-free dividends because it's invested in New York State or muni bonds. Then there might be foreign taxes paid. Each one of those things, it's like eating an elephant, one bite at a time. Each thing is handled individually. So all of the qualified dividends would go on that one line. All of the total dividends would go on the other line. All the capital gains would go to the Schedule D, to the capital gains line on the Schedule D. All the foreign taxes are added up and go to 1116. So Each thing is done individually, and yes, you total them together.
So you're doing that fine as long as you're looking across and looking at each section. There might even be some foreign tax paid.
Right.
If there's some foreign tax paid, you're going to do an 1116.
Yeah, I was just curious that Vanguard doesn't add those up for us.
Well, see, because each thing has to be handled specifically for each account. So those are all different funds. So you got Fund A, Fund B, Fund C, and each one is handled differently because they're keeping track of the basis by your reinvested dividends or not reinvested dividends according to funds, because when you sell them, that's when you all those different funds are added together, so your cost basis is done correctly.
And don't forget, if there's a brokerage fee, to deduct that this year.
That's
on
right.
the
and look
bottom
on the
of
back of
Schedule
your
A.
Vanguard statement. Like at the end, it'll say what the brokerage fees are, and that's a miscellaneous itemized deduction.
Oh, okay.
Okay?
Thank you very much.
All right, thanks, Brian. All right, let's talk about some more of these. By the way, EG Tax is open tonight until
7 p.m.
7 o'clock. On Monday through Friday, we're going to be open all next week, 9 to 9.
Yep,
right,
next Saturday we're open till 9. So we're open on Sunday.
Our mall offices, we have 3 mall offices.
That's right. We're at the Boulevard Mall. We're at the Factory Outlet Mall. And we're also at the McKinley Mall. So we've got you covered. So if you want to come tomorrow, Sunday, we can do your return at those offices.
Right. And I will tell you, whatever it is, we can handle it, and we will help you through it. And so if you're kind of like stuck like a deer in the headlights and you go, oh, I just don't know what to do, believe me, we can handle it.
Yeah. One of my real estate agents, she's like, well, Tiff, can I just wait till the day after? And I said, make an appointment at 9 o'clock on the 17th, and you and I will do it, because I don't want her to wait till the day after.
Right. All right, so let's talk about some of these other things. So just like this gentleman had just called, he's talking about qualified dividends and long-term capital gains. You save money, this is little things mean a lot, by using the computation form on the Schedule D to compute the liability on those qualified dividends and long-term capital gains. If you don't do it, you overpay your taxes.
Mm-hmm.
Okay? So that's that. Other thing, C Corp's becoming an S Corp. If you are an owner of an S Corp and you don't understand why you're paying double taxation, because you're paying taxes on the dividends, you're paying taxes on the net profit. So think about seriously making the election to become an S Corp. You pay taxes once.
Mm-hmm.
All right? Let's see my list here.
Adjust your New York State refunds by the credits.
Right. So when on the line 10 on the 1040 where it says state income tax refund, don't just take what your refund was from New York State last year. That's
Overpaying.
Possibly wrong, because New York State has all these credits. So let's say your New York State refund last year was $3,000,
Mm-hmm.
but you had the child tax credit, you had the firefighters credit, you had the education credit, you had the Empire State, you had all these credits. Let's say those credits came to $2,000. You get to reduce the $3,000 New York State refund. Then that's going to be taxable on your federal by that. So only $1,000 of it's taxable. So if you're in the 25% bracket, you just saved yourself $500.
Wow. Just do it.
Because people don't know. Okay, let's see. The other thing is deductions versus credit for, on the New York State return, if you have kids in college, there is a college credit that you can take on the New York State return, but you could, if you're a higher income couple, you might do better off taking it as an itemized deduction.
Which is really unusual, because that's something you can't do on the federal. So most people don't think like that. You can never take on the federal your college generally as an itemized deduction.
But on the state, you want to take it as an itemized deduction.
So you have that option.
So if you didn't do that in the past, amend your returns and get your money back. The other thing is, if you find out, and I only got a minute here, I'm running out of time. If you are somebody that owes money to the federal government, think about getting a zero interest credit card to use to pay the liability, because that gives you like 18 months at 0%, as opposed to
setting up a payment plan,
which is going to be up to 25%.
And then they charge you a fee to set up that payment plan.
So until next week, if you guys need help, you can go to our website at egtax.com. You can call any of our offices. We have real people that talk real languages, want to help you. If you want to come into our corporate office, we're there to help you. All I can say is if you don't use us for whatever reason you're not filing your return, we can get you done, and we want to help you. So until next week, I'm Esther Gullius, the tax lady with Tiffany Fabian. EG Tax wants to help. Have a great week. We love you. Bye-bye.